And at the same time, we look at the silver and gold situation, and fortunately, they've been going exactly opposite the stock market.
Uh-huh.
In other words, hey, the stock market goes down, gold goes down. Well, gold went down, guys. Okay, you had a
Yeah.
good correction. We're 30% off the high. Silver's much more off the high. If you treat the high as a quote high, because it was really up there for a couple of days, at
Yeah. Right.
20. It wasn't like it lived up there for months. Uh, right now, our technical work on silver and gold argues that this pullback is nothing but a major, sharp, corrective process in a massive bull trend that is not at all completed.
Mm-hmm.
Okay. On the way up over the last couple of years, you can find versions of what we have just done at different and lower price levels. I'll
Mm-hmm.
give you an example.
Mm-hmm.
Back in October of 2024, first of all, in March of 2024, silver was still confined below that $30 high that occurred in 2020. But it was coming up through $25 in March of 24, not near the 30 high that occurred in 2020, but got up above 25, and we said, that's it, we're going to accelerate up out of here.
Mm-hmm.
And sure enough, they shot immediately by March. Oh yeah, so in May you were up to like 53, and by October of 2024 you're up to $35 again from that level at $25. So you blew out the 2020 price high at 50 bucks. Excuse me, $30, and went up to 35 in October 24. Okay, they started to sell it.
Yeah.
It dropped down to 30, traded below it, never closed a week below it. Went back up to 35 again in March of 2025. So like 6 months later, you'd been in this 6-month distribution zone, constant selling, but they couldn't seem to break it.
Oh.
It was to get down to 30 and they'd stop it. So it was a little box there,
Uh-huh.
6 months wide. Well, how wide are we now? And oh, it's terrible. It's all over. You just broke through this big range bottom. We did exactly the same thing in 2025. But when we turned up from that low in April of 2025, by the time June came, you were headed back up to the highs, and we said, this is it. You're going to blow up again, upside. Well, you did. You went from 35 in the mid 50s in a heartbeat. Okay.
Yeah.
But the first thing you had to do was blow the bottom out of the price chart range.
Uh-huh.
So everybody ripped their hair out and said, that's
Yeah.
it. You're never going to $50 silver again.
Yeah.
And as soon as you did that, it was like over in a week. Next thing you knew, you were lift off again. What we've just saw, for example, if you look at a price chart of gold or silver, you took out all the lows of the last 5 months.
Uh-huh.
Okay. So that's what? Negative, right?
Right.
So major range breakout, it's all over, you're done. Okay.
Sure.
But we look at momentum. First of all, momentum's not near the low we made in March.
Mm-hmm.
On almost any time scale we run of silver, weekly, monthly momentum, you're not near where you were in terms of momentum sell-off. So you've got what we call a non-confirmed low. Price
Right.
made a new low. Momentum said, what? I'm going to make it a new
It
low.
ain't happening.
But then the main issue is not the non-confirmation. That's a tap on the shoulder. That's all
Uh-huh.
it is. Wet noodle indicator. We look for structural breakouts, meaning something when you go through it, you hear a snapping sound. You get a gush.
Uh-huh.
Right now, when we look at daily, weekly, monthly, 50-day momentum of gold, silver, we see nothing overhead but structures to break out through that are very, very close. So if you looked at the momentum charts
Mm-hmm.
and plotted the overhead ceilings or downtrend lines that have been bumped and bumped and bumped,
Mm-hmm.
you get next week, next month, much above where we are now, like a handful of percentage points in silver, a couple percent in gold. You start blowing through all of these ceilings.
Mm-hmm.
Meaning, if these were price charts and you plotted those lines, you'd say, I got to buy that.
Oh, yeah. Uh-huh.
Now, price doesn't look like that because, frankly, you could probably rally silver back up. You got to get above 90 probably to turn most heads because most of the rallies since the January drop peaked just above 90. Okay.
Right. Right.
So they don't know where to get back in.
Silver just broke below 60. Gold is hovering near 4,000. But don't panic. Michael Oliver says this is a textbook bear trap, not a market top. Look at the price made a new low, but momentum completely refused to confirm it. This is the exact same pattern we saw back in 2025, right before silver broke through 30 and absolutely exploded. and look at the mining stocks, they are historically cheap compared to gold. The XAU spread is sitting at just 8% compared to its historical 25% average. The miners are a coiled spring. They are about to explode. Meanwhile, the broader stock market is topping out. Apple and Microsoft are trading near death levels. Semiconductors are hitting a dangerous three-hump blow-off top. Bitcoin is collapsing. A massive bond crisis is coming. The Fed will be forced to print money. When the dust settles, gold and silver are the only game left in town.
It happened to be, it's not just a silly average. For instance, gold broke under its 200-day 3, 4 weeks
Right.
ago. That,
Right.
that to us, that's meaningless because it wasn't structurally important. You just wove it. You often weave these things.
Sure.
In fact, you did that back in 2023 and it was total false. But the 50-day average oscillator actually has beautiful structure, repeated three highs that have come up and bumped the 50-day from underneath after having broken below it. Meaning you've set a structure on the momentum chart that if you plotted it, you'd say, oh boy, that's a quadruple top breakout if I break through it. You ever get back above the 50-day again? And I think right now it's going to be about 5,400 coming up here soon. That's our last buy signal trigger level. But most of our triggers will start about, I said 40, it's about 4,400, not 5,400, excuse me.
4,400, right.
Yeah.
Yeah.
Many of our triggers will start to engage around 4,200. So we've got like 2 or 3 buy signal levels depending on which indicator on gold, and we have similar ones on silver. And frankly, the proximity of the one to the other to the next is so close that it's likely that if you even trigger the first one, it's going to have enough oomph power to get to the second one and get to, you get what I mean.
I see.
Sticks of dynamite that are all lined up.
Very rapidly.
And I think we're just below those levels right now. And we're positioned to, if we sneeze to the upside, you're going to start blowing this stuff out.
Yeah.
And which argues to us it's likely to be an upturn that is very rapid. Meaning you don't get a chance to rethink your so-called fundamentals. Okay. The one we're really watching right now, if I had to say there's only one chart you need to watch, throw all your price charts away. Look at the spread relationship between the XAU index and gold. This goes back to the 1980s, the XAU. It's the gold and silver miners index of Philadelphia.
Right.
Or, and we're doing this now, GDX and gold.
Right.
Where at the end of each month, you divide the price of GDX into an ounce of gold, plot that percentage number on a chart. 10 years, 11 years now, we've built a range of those readings. Where if you only looked at that chart, you'd say, oh boy, what a base. If you ever go through the top of that base, they're going to explode. Well, they will. Because every time that spread moves up, favoring the miners, it also translates into net price gains for gold, silver, and the miners, but with the miners leading. There's a number on GDX versus gold that we're again trying to approach back up to, which was the February high close on that spread. You ever get back up there again, and we're only a couple decimals away, percent-wise. We're going to blow the lid off that 11-year range, in which case that spread is telling us you haven't even seen it begun. This indicator will be rendering its first major massive breakout.
Wow.
There's no resistance on this chart either. Once you break out that spread, you look at the chart history and you say, well, where's resistance maybe? Where's the old lows? You'd have to double or triple the miners in relative value to gold just to get to the next resistance. So what we're saying is watch that spread, and nobody else is watching it like we are. When it breaks out, it's game on, fresh for the whole thing. Meaning what we've seen in gold and silver up to this point is not even really begun. Plus this time it'll be led by the miners. So that's one of the metrics we're watching that hardly anybody even looks at.
So you think this time the miners will lead the bullion?
Well, they already are. They're doing over the last couple of years. If you do the math, the miners are actually up more than gold. It's hard to believe, but they are.
Well, as depressed as they are still.
And they're still historically very low in their relation. What's XAU divided into gold? Well, heck, it's either side of 8%. Well, heck, it used to be 25%.
Right.
For decades.
Just
a bunch of semis.
Okay.
But when we look at their chart, the SOX index or the SMH, and
Uh-huh.
plot it on a weekly basis, we see a price pattern we came up with decades ago called the power thrust with three humps. And that's
Oh,
when you have a huge explosion, first leg,
yeah.
and then you make a peak, you pull back. That's point number one. Pull back sharply, but not too deep, just very quick. And then two, you go another thrust up, but it's not as powerful as the first power thrust. It's just a nice new high. Semis did that, pull
Uh-huh.
back again. And just recently, they had their third hump. Okay.
Huh.
That one appears to be failing. Now, you don't
Uh-huh.
want that one to fail because we've
Uh-huh.
got some numbers on the weekly that the semiconductor SOX index, for example, is traded down to this week that you better not be there next week because weekly momentum will start to break a very clear structure, meaning the break we just saw off that third high is only the beginning of something that could be sharper. Now,
Mm-hmm.
this is not a long-term metric, but given the verticality in the semis,
Mm-hmm.
the blow-off looking nature of that move, it looks like when you turn down, even the price guys won't know where to buy it.
So,
Yeah,
yeah.
well,
So,
obviously there's fundamentals out there. We know what they are. We've got a huge debt crisis, not only federal government, but we've got a debt crisis, commercial real estate. We've got homeowners. There's a debt crisis. The credit card companies we got bearish on last October. Punch up a Visa or MasterCard chart. Look what's happened since October. Yet nobody's talking about it. Okay. There's a credit crisis out there, and it's far bigger than 2008 and 9, where it was just mortgages.
Lord help.
And what's the Fed going to do? Warsh is not going to raise rates. He was
Oh,
BSing. He was trying to cool off the heads in the Fed, the other guys who are anti-Trump, but also wanted to raise rates. So
yeah.
he couldn't go in there and act like a Trump puppet, said, no, we're
Right.
going to
Of course.
raise
Of
rates.
course.
So he said, no, I'm with you guys until we see the data.
Mm-hmm.
And by the way, the breakage that we suffered in gold and silver was evident on the price,
Mm-hmm.
daily, weekly, monthly, but also evident on intermediate momentum factors. Factors that once you break them, they're good for maybe several months, maybe a handful of weeks, etc. None of the long term, like annual momentum of silver and gold. This drop is just a drop. You're not breaking anything.
Uh-huh.
Yes, it's a sharp drop, but it's a zigzag within a long-term uptrend process of which this drop does not break anything. It's just a counter trend move. So long-term momentum is not disturbed by this break.
Mm-hmm.
And the problem with getting out, if you're an investor now, if you're a trader, it's a different story.
Yeah.
We're
Of course.
focused on the investors.
Mm-hmm.
If you got out every time the S&P, excuse me, that silver and gold did this thing,
Yes.
blew out a range low, for example,
Uh-huh.
where did you get back in? Or
Right.
did you? And I bet it was higher than where you got out
Right.
when they broke the floor,
Yeah.
or you didn't get back in at all,
Yeah. Yeah.
which is like where I think we are right now. I think a
Right.
lot of these
Keep
people
thinking,
got
oh,
out.
this is,
They're through.
yeah.
No.
You keep thinking, I'm not going to chase this thing. It's already too high, and
Yeah, yeah.
not from a.
Our prior buys of the prior years have been 25, 35, and 56 in November. So our average price the last couple of years is down in the mid 30s somewhere.
Mhm.
Okay. But anyway, we've returned to that last buy level at
Yeah.
$56 with November close. We did not, frankly, expect to see it come this low, but it did. But our problem with being negative is we don't see any long-term reasons
Uh-huh.
to assume this is anything more than a washout
Right.
to puke the market out of its weak holders, the latecomers who bought it at 100 instead of it last November or June of 2025 when it was 35. They got shaken out. And that's the problem with late entry.
Mm-hmm.
You're vulnerable. Don't blame the market for your pain. It's where you got in that mattered.
Yeah.
And in the long run, pulling back to 56 and now 58, 59, if you go up from here, you'll look back on this and say, oh, geez, I did it again. Because the reason for the oil upturn that we timed in January at $65 is not based on a war.
Yeah.
It's based on vast underpricing historically to its own prices, underpricing to the S&P, underpricing versus other commodities. It's just cheap.
Yeah.
And if money's going to be printed to save this or that financial asset, it goes somewhere.
Mm-hmm.
And right now, it has been going over since last October into commodity assets because they firmed. Even with the recent pullback, they're nicely above where they were at our buy signal last October. Money will flow somewhere else
Mm-hmm.
if the perception is, uh-oh, I want out of this high risk stock market area.
All right.
what looks good, what's doing well, okay?
Right.
And you're right, gold miners, silver miners, and commodities in general.
Well, you mentioned that, so would you see oil now where it currently is as maybe a bottom?
70, yeah.
Yeah.
Yeah, it's at the point now where I would definitely be looking, we're going to be looking at our intermediate trend metrics because the
Uh-huh.
long-term turned positive at
Uh-huh.
65 in January.
Uh-huh.
But we didn't like the rally because we knew who joined it.
Ah,
Latecomers bought it at
yeah.
90 and 100 and $115 and they got creamed and it's justified. That's you don't chase something late. If you do, you can get killed.
Yeah.
Even if the trend is right, in case we think oil's going higher. Now we've had enough of a washout where I think those guys are dead.
Are
They're
gone. Yeah.
out of the market.
Mhm.
Uh, and now you got to look for the fundamental buyers who are coming in. And
Right.
I think you'll start to see them. And we're looking for technicals that tell us, okay, upside resumption again.
Yeah.
And we'll monitor that. But I suspect we're in that zone where probably we'll start to see that soon, telling us, okay, now it's safe to buy oil for real long-term
Long term.
reasons.
Okay. You'll get it.
Vastly more than the S&P has gained,
Yeah.
and
Just
yet
buy
people
gold.
don't recognize it, and I love that because we
Right.
don't want them to recognize it till the tail end.
Yeah, at some point they'll have to recognize it. One more question, Michael, before we say goodbye this time. A Bitcoin. I mean, there's still people hanging on to Bitcoin. What are
Mhm.
your charts telling you now about Bitcoin?
Well, we told them back coming off that $127,000 high when it dropped down under 110, and then second level was just under 102.90, I think it was, back last November. We said bear market, major collapse.
Yeah.
And our first target was 60,000. It stopped at $60,005 in February and bounced.
Congratulations.
We said, okay, the bounce could carry into the low 80,000s. It did. Now we're back under 60,000 again. I mean, and
Yeah.
challenge, we take it that low.